So the report looks at how banking technology and technology more generally is likely to develop in the next 3 to 5 years and even beyond. It gives us as an organisation a chance to reflect on what we need to do to keep pace with our customers' requirements and their reactions to how that technology will impact their lives and how they deal with banks like ours. From time to time, when you look at it, it can feel a bit like science fiction if you look far enough out, but those trends and those technologies will become a reality, and we have to have plans and strategies that allow us to continue to operate and fulfill our customers' needs in a world which is changing technologically so very, very fast in the future. Well, alongside the escalation of new technologies and their implementation, one of the key findings is all about trust. Not just trust in the technology and not just trust in banks, but banks have traditionally been where customers trusted their finances to be looked after safely and securely. And kind of as we introduce new technologies, it's important that we continue to help customers develop that trust. But that trust is as much needing to be developed in the technology itself, that it's not seen to be intrusive, that it's not seen to be collecting data that is inappropriate, but customers can trust it to do what it's supposed to do in a safe and secure way for them. We're all going to have to get used to interacting with banks and with each other in many, many different ways, using more voice recognition, using more AI, using more wearable devices. And I think as communities get used to that, they will become naturally part of their day-to-day interactions with each other and with their banks. And I think as we move forward, looking at those communities of customers, kind of self-employed, less affluent and kind of older people, helping them build that trust with this new set of ways of interacting with banks and the rest of society will be part and key of that success and a key responsibility for us in the financial services industry. It's not surprising that younger people find the use of technology more acceptable and easy. What was a surprise was the universality of some of the responses. Customers of 21 or 81 are more comfortable talking to another human being when the purpose of their conversation is something that's more complex or more financially detailed. But across the spectrum, across all ages, we're starting to see customers using technologies and using kind of modern ways of interacting with banks and society much, much more. And that was a real surprise for us in the report. We talked today about open banking. I'm absolutely certain that in a few years' time we'll just call it banking. And that sharing of data, that capability to collaborate with a multitude of service providers and product providers across the spectrum. We've approached it in a very stable, safe and secure way. We launched our aggregator last year. We were the first bank to do that using the new API technology entirely. And we are kind of building out those capabilities. But 2019 has been a year where we've seen a lot of consolidation as people get ready to implement PSD2. I think in 2020 and 2021 we'll start to see real leverage of sharing of data through open banking technology and pipes to improve things for customers like managing their money at different banks, but also improving the mortgage application process, improving the way that banks interact with other providers and offering services and products to customers based on our understanding of their data, identifying a need which we can then support to the benefit of them, saving them money, saving them time and adding value services going forward.